Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with our analysis of the euro currency. So in general, recently on Friday, market has confirmed our suggestion that it should go in a bit lower and challenge the previous lows. It just was suggested by the performance of the dollar index and has actually, or better to say, had the grabber on the weekly chart that should be completed by the challenging the previous top on the dollar index. That suggests the corresponding action on the euro currency. And actually that has happened on Friday. At the same time, market has formed the bullish reaction right around the bottom. It was supported partially from some fundamental event. As you know, it was approved fiscal support to the economy for infrastructure for the $1 trillion by the evening on Friday, and has supported the currencies as well as the stock market and gold. As you can see, it was extreme rally on the gold on Friday. And euro also has shown reaction. This is first moment. Second moment, guys, in today's weekly report, we dedicate a lot of time to analysis of the inflation and to the recent statements of the major central banks. So, Bank of Australia, Bank of England, and European Central Bank partially. It was actually last week, and Fed. So as a result, you can see that market has got the clear signal from the central banks to hold the tightening horses. That's market do not expect and do not put their expectations on the really hawkish policy from the all central banks. Even the banks that were standing close to the rate decision, such as the Bank of England, actually pushed the reverse and did nothing, keeping the rate flat. The same we could say about the Bank of Australia. And that tells that central banks are not intent to take any aggressive steps, and overall performance will be relatively gentle. That drastically changed the background on the markets for a medium-term perspective. I suppose that this will last at least, for the end of the first quarter of 2022. So this policy. And open road for demand for the risky assets and for the dollar rivals, of course. So on the gold performance, you already see reaction on the stock market. Market just keep going higher, and some positive spikes have happened on the other currencies such as euro currency. So because currently it seems that European Central Banks is not an outlier anymore. And that changed the rules of the game currently on the euro currency, at least in the short term. We are not talking about the possible sharp reversal, although sort of theoretically it also could happen. But this performance and this policy open road for possible moderate pullback, moderate upward reaction on the markets across the board. And euro currency is not an exception. Of course, this is just a theory. We do not have yet the science for that, because it might be just right at the starting moment. And it's still a long way to go and to get some real confirmation in the market, at least on the daily chart, for example. But currently, we're starting from the performance on the intraday charts and then see what will happen. So from the technical point of view, market has not bad support. So in general, overall background stands relatively soft and gentle for performance of the currencies. Euro currency has created the wash and rinse of the previous losses, which suggests that this is potentially bullish pattern. More important, the things that we see on the dollar index. So if we'll take a look at the dollar index, you can see that, first of all, weekly grabber has been completed, because market also has formed this wash and rinse here. And dollar index stands at a strong weekly confidence resistance. So this is really very good background for reaction in the opposite direction. So from that standpoint, the top that recently has been formed here and the lows that was formed on the euro currency now takes the special meaning for a market. So this becomes really important. In the shorter term, situation looks much simpler and clearer compared to what we have on the longer term perspective. So if we have a lot of doubts concerning the possible bullish reaction and the reversal in the market, in the shorter term it's a bit more simple. So these lows, these tops have special meaning here, and in fact this is a validation point for a short-term scenario that we have. On the euro currency, correspondingly, we're talking about these lows. So on a daily chart, to understand whether we're correct or not in our suggestion that maybe indeed market could show a bit deeper upward action, we need to get the pattern. So most probable pattern that might be formed here, at least currently, it seems that it might be on only the double bottom. So anyway, market has to stay above the recent lows to keep chances on the bullish dynamic and bullish performance. That's why, while we don't have the pattern yet here, and we have actually the bearish trend in all time frames, starting daily, weekly, and monthly, on the daily chart, we are not hurry up with the taking the long position. We're still keep watching what's going on. At the same time, as dollar index stands in a strong resistance and market has shown short-term bullish reaction here, it's not time to go short as well. That's why we intend to focus on the intraday performance in the beginning of the week and then see what will happen. And these lows will become the cornerstone of this short-term setup. On the 4 time frame chart, market is coming to the confidence resistance around 1577, 1581, and it means that some downside reaction should happen on this resistance. So because in general performance to the downside was relatively strong, and the pullback here probably should happen. At the same time, we have the bullish divergence here, which means that if market will be able to stay above these lows, which become the vital point, and in fact here we also have the bullish engulfing here right on the bottom, that tells us that probably market in this case will be able to hold the bullish context and to show some extension to the upside. What the extension will be, currently difficult to say, but we intend to use some common targets, and it is logical to suggest that if market will be able to stay above these lows and form some bullish pattern here, we will consider the movement back to the 116 area. That would be the next first step that market could do. On the hourly chart, market is forming something that looks like the hand and shoulders pattern. At least we could recognize the shape here. And if we will get the pullback somewhere to the 1540, which is a 50% support, 1536 and the 618, somewhere around the 1540, that will be the subject to think about taking the long position. Risk will be very small, so approximately 20 pips till these lows. And well, if pattern will appear here, I mean, it's kind of the hand and shoulders type of action. That lets us to think about taking the long position. That's the subject to start from. And then we'll see what will happen. Downside breakout, acceleration to the downside, reestablish the bearish status quo, and it means the market is going lower. In this case, the chances that market will proceed lower back right to the 113 area increase significantly. Because in this case, the dollar index probably will break out the weekly resistance area. While market stands above these lows, chances on the bullish performance exist, and we intend to deal with it in the beginning of the next week.